The crypto world is on the brink of a monumental shift. Donald Trump's return to office in 2025 has ignited a Trump bump, fueling unprecedented optimism and pushing Bitcoin past the $100,000 mark. But what do his actual policies mean for your digital assets? Today, we're dissecting the core of Trump's cryptocurrency agenda, its profound regulatory implications, and the projected financial impact on investors and the broader crypto market throughout 2025. Donald Trump has declared his administration's goal to transform the United States into the undisputed crypto capital of the world. This isn't just rhetoric, it's backed by significant executive action. Early in 2025, President Trump signed a pivotal executive order. This directive aimed to support the growth of the U.S. crypto industry, explicitly revoking previous Biden administration policies, seen as restrictive. A key component was the explicit restriction and prohibition of central bank digital currencies, or CBDCs, reflecting concerns about financial stability, privacy, and national sovereignty. Furthermore, the executive order promoted U.S. dollar-backed stablecoins, ensuring crypto companies fair access to banking services, and promising greater regulatory clarity. A second executive order in March established a U.S. strategic Bitcoin reserve and a digital asset stockpile, primarily composed of cryptocurrencies seized in law enforcement actions. This strategic Bitcoin reserve is unique. It aims to acquire more Bitcoin through budget-neutral strategies and cannot be sold, establishing Bitcoin as a sovereign strategic asset. The administration signaled a clear pivot towards light-touch regulation, moving away from the regulation by enforcement approach of the previous era. The Securities and Exchange Commission, under new leadership with crypto-friendly Paul Atkins, has paused high-profile enforcement cases and launched a Crypto 2.0 task force to establish clear regulatory frameworks. Legislative momentum is also building. Stablecoin legislation, such as versions of the Stable Act or the Genius Act, has bipartisan support and is expected to provide comprehensive federal regulation for this crucial crypto segment. So, what does this mean for investors? The initial reaction has been overwhelmingly positive. The Trump bump led to Bitcoin soaring past $100,000, driven by optimism for a more favorable regulatory climate. Clearer, business-friendly guidelines are expected to attract greater institutional interest and participation, boosting liquidity and legitimacy for the entire crypto market. We could also see the emergence of new crypto financial instruments, like more exchange-traded funds and derivatives, offering diverse investment options for both retail and institutional players. However, it's not all smooth sailing. There's skepticism about the long-term sustainability of the Trump bump. Critics point to crypto's lack of intrinsic value, energy consumption concerns, and potential for misuse. Alarmingly, Trump's tariff policies have been linked to significant crypto market sell-offs. A black swan event triggered by tariffs led to a $19 billion crash and massive liquidations. Furthermore, ethical concerns linger due to the Trump family's personal crypto investments, which have seen wild fluctuations. The stock of American Bitcoin Corp, NARS, linked to the family, declined sharply despite broader market recovery. The pardon of Binance founder Zhao also sparked intense debate, raising questions about regulatory trust and potential political bias influencing market stability. For investors, the key is a balanced approach. While the push for regulatory clarity offers exciting opportunities, the potential for volatility, driven by political decisions and broader economic policies, remains a significant factor. Stay informed, diversify wisely, and understand that in this new era, political winds can powerfully sway the digital asset tides. What are your thoughts on Trump's crypto future? Let us know in the comments, and don't forget to like and subscribe for more insights.